All right, so we're going to talk about how to increase your credit score in 30 days. I'm going to give you some basic information, some fundamental information for you to increase your credit score in 30 days. It's not complicated, it's very straightforward, it's very easy to do. You just have to understand how to do it. Okay, so how to increase your credit score in 30 days. So let's get into it. So now, the easy answer, or the easiest answer, or the easiest way to improve or to increase your credit score is just to pay off your balance, right? So that's the easiest way to do it. Just pay off your balance. So let's say if you have a credit card with Capital One, right? So you have a credit card with Capital One for, let's say it's $1,000. So that's the limit is $1,000, and you're using, all right, you're using, let's say you used up $900. Well, all you have to do is just pay off that $900, so that way your credit score can increase in 30 days. So that's the easiest way to do it. So let's say you only have one credit card on file. You don't have any late payments. You don't have any collection accounts. You don't have any charge off. You don't have any derogatory. Now, the only reason why your credit score is low is because of that one credit card that you have on file, right? So in this situation, all you have to do is just pay down that credit card, right? Pay it down, pay the balance down, either pay it off in full, then you should see your credit score increase in 30 days. Now I'm going to explain to you the reason why it can improve in 30 days. So now I just gave you the simple answer. The simple answer is to just pay off the balance and you should see an increase in your credit score. So now that's the easy answer. So now let me explain to you so now you understand exactly what do I mean. Okay, so you have a credit card. Let's say you have a credit card with Capital One, right? Capital One gave you a credit limit of $1,000. So you have $1,000 on your, so let's say you have a credit card with Capital One. So credit card is $1,000. Okay. So now Capital One, all credit card companies do this, right? All credit card companies, whether it's Capital One, TDs, BMO, whatever, whoever the credit card issuer is, they update their information every day. So internally, they update their information every day. So whenever you make a payment, it usually takes about 30 days for the credit card company to receive that payment. And once they receive it, it will reflect on your account that you've made the payment, and it will bring your balance down to to zero. Now that's internally, right? So they do that internally within their system. So Capital One, TD, BMO, whoever you have the credit card company with, right? So now you also have two credit bureaus in Canada, right? You have Equifax and then you have TransUnion, right? So now Equifax and TransUnion, they also update their internal data system every day. So every 24 hours, they're updating their information. Every 24 hours, they're updating information. Now what happens is this: Capital One, they send the information to these two credit bureaus, Equifax. They send it once a month. So once a month, right? Once a month, they send the information to these credit bureaus. So now you have to now know the billing cycle, the statement print date. That's when they send the information to these two bureaus, these two credit bureaus, Equifax and TransUnion. So you have to call your credit card company, and find out what is my billing cycle, what is my statement print date. Because once you know your statement print date or your billing cycle, which is the same thing, that's when you know, okay, you know what, I need to make sure I make this payment before the credit card company sends this information to either Equifax or they send it to TransUnion. Very important. Your billing cycle or your statement print date, that's when your credit card company sends the information to Equifax and TransUnion. So you want to call your credit card company out to know when the billing cycle is. Okay. So that's how you increase your credit score in 30 days. Because remember, your credit card company updates their information every day, every 24 hours. And then Equifax and TransUnion, they also update the information every day. However, your credit card company only sends the information to the credit bureau once a month. See, so you have to know when exactly, what date of the month they actually send that information to the credit bureau. That's what you call the your billing cycle or your statement print date. So once you figure out what your billing cycle is or your statement print date, then you want to make sure you clear out that balance, right? If you have $900 balance on $1,000 credit card, you want to clear that balance before the billing cycle. Okay, very important, before the billing cycle, right? And as I mentioned, the billing cycle is once a month. So let's say the billing cycle is on the 15th of every month, right? On the 15th of every month, then you got to make sure you have your payment in before the 15th. Now you want to give it 3 business days because that's how long it takes for most credit card companies to receive payment. It takes about 3 business days for them to receive payment. So that's why you want to make sure that you're not paying it on the 15th, because once you pay it on the 15th, it's too late. It's going to show on your credit bureau. You want to pay it at least 3 days, at least 5 days before the billing cycle. So very important. Remember that, right? If you want to improve your credit score in 30 days, you have to know when your billing cycle is. Once you figure out what your billing cycle is, then make sure you clear out that payment before the billing cycle. Okay, so now, as I mentioned, your FICO score. This is your FICO score right here. So your FICO score is what lenders use to decide whether to give you credit or not. Okay, so FICO score is the scoring, is the scores that 90% of all lenders use in North America. So the TDs, the BMOs, the Scotiabank, they all use your FICO score. Now, if you're in Canada, most consumers, most of us, we don't have access to our FICO score. We only have access to our, to our TransUnion score or our Equifax score, right? But lenders don't use TransUnion score or Equifax score. They use the FICO score. Now, your FICO score ranges between, right, in Canada, your credit score, right, your credit score, it ranges between 300 to 900, right? So 300 to 900. Now, usually you want to be at, let's say, if you're at 660, right? 660 is considered good credit, right? So 660 to 724, according to Equifax and TransUnion. If you fall within that range, then your credit is good. If you're under 600, then you have a challenge credit, right? You have what's called as, your credit is a little bit challenged. So you want to aim for 660 and above, 680 or 700, right? Once you hit 760, then you pretty much have, excellent credit, right? So that's your credit rate. So your credit score, right? Your credit score ranges from, let me write that down again. So your credit score, in Canada, your credit score in Canada, let me write that again. So your credit score in Canada ranges from 300 to 900, right? If you have a 660 credit score, then you are in a, that's a good range, right? Because anything from 660 to 724 is considered good. Anything from 760 and above, all right, 760 and above is excellent credit. So you want to aim for 660, right? 660 and above. Once you get to 660, then you're good. You won't have any challenge getting any credit and so on. So, but yeah, so that's what it is. Now, as I mentioned before, your FICO scoring system, the way they calculate your score is this. So what you're looking at is what you call the FICO scoring system or the FICO scoring model. Okay. Now, 30% of your credit score, right, is calculated based on the amount that you owe. So in this situation, so let's say you have a credit card for $1,000, right? Your credit card is with Capital One, your credit limit. So let's say you have a credit limit of $1,000, right? If you're using, let's say you've charged, if you have a balance of $500, then your utilization is 50%. So that means you are too high, right? You want to keep it under 30%, right? You want to keep it under $300. So in this case, so let's say if your credit, let me use this again here. So let's say if your credit is clear this, sure, yes, I'm going to clear this here so you can see it better. So your credit limit, so you say you have a credit limit, right? Your credit limit is $1,000. You want to use, you don't want to use more than $300 at any time, right? Because $300 is 30% of 1,000, right? So you want to make sure you're not using more than $300 at any given time. So you want to stay below the $300. Why? Because the FICO system, right? Because very important, the credit system here, that's how they calculate your score. So 30% is based on your credit, the amount that you owe. So which means in the credit industry, lenders, financial institution, they want to see that you're not using more than 30% of your of your credit limit, right? So if your credit limit is $1,000, not you don't use more than $300, right? If your credit limit is, let's say, $300, don't use more than $90. If your credit limit is $10,000, don't use more than $3,000. That's just how the scoring system works, right? 30% is based on the amount that you owe. So which means you want to stay under 30% of your credit limit, right? So as I mentioned in this case, um, your credit limit here is $1,000. Don't use more than $300, right? So now once you use, so let's say you use, if you're using $900, then you are at 90% utilization ratio, which is very high. So that's why I mentioned earlier, the title of this video is how to improve your credit, how to increase your credit score in 30 days. So the way to increase your credit score in 30 days is to make sure that you're not using more than 30% of your credit limit, right? So make sure that your credit limit is under 30%. Once you bring that balance down, once you bring that balance uh, once you bring it down to 30%, then you should see an increase in your credit score, right? Because remember, the FICO scoring system, that's how they calculate your score. Your score is based on the amount that you owe and also payment history. Payment history is very important. So 30, just these two categories there. 30% of the amount that you owe and 35% payment history makes up 65% of your credit score right there, right? So if you're always making payments on time and if you're keeping your balance low under 30%, then your credit score should be fine. Now, as I mentioned, 30% is what lenders want to see you. Banks want to see you. They don't want to see you using more than 30% of your credit limit. So whatever credit limit that you have, always make sure you're not using more than 30% of that, right? Because you want to improve your credit within 30 days. That's how you do it. Why? Because remember what I told you, your credit card company, they send the information to the credit bureau once a month. So you have to figure out what day is it that they send that information to the credit bureau. The date that they send is usually the billing cycle or the statement printed. Call your credit card company and find out when your billing cycle is, right? They will tell you, oh, the billing cycle is on the 20th of every month. So which means if you have, if your credit card limit, right? If you have a credit limit of $1,000 and you have a balance on it for $500, you have a 50% utilization ratio. So it means you've used 50% of your available credit. So you want to make sure you pay that credit, that balance either in full or before the billing cycle, uh, before the statement prints, right? Because that's when the credit card company, your credit card company, they send the information to the credit bureau once a month. So that's how you improve your credit in 30 days. Very simple, very straightforward. I didn't want to complicate you. It's very straightforward. Just pay down your balance. Find out from your credit card company when your what is your billing cycle, because that's the one they send that information to the credit bureaus. They send it once a month. So if you pay up the full balance before the billing cycle, then you should see your credit score increase within 30 days. Right now, as I mentioned, that's if right. That's if if you only have one credit card, you don't have any late payments, you don't have any collection accounts, you don't have any derogatories. There's no consumer proposal. There's no serious delinquency like 90 days late, or 180 days late. If the only card that you have on file, if you only have one credit card on file and the balance is high and you're looking to improve your credit within 30 days, that's all you have to do is just pay down that balance. And then when the credit card company sends that report to the credit bureau, Equifax and TransUnion, then you will see your credit score go up within 30 days. Now, as I mentioned, the reason why it's 30 days is because your credit card company only sends the information to the credit bureau once a month, right? They update it internally every day. Same thing with the credit bureaus, Equifax and TransUnion. They update their internal data, their internal system every day. But Capital One or MBNA or TD or whatever credit card company you're using, they only send that information, or they only send a statement to the credit bureau once a month. So that's why you want to find out when your billing cycle is, and you want to make sure you pay it off before the billing cycle, so that when the billing cycle, the statements prints, they send it to the credit bureau. It's showing that your balance is at zero. So your credit card limit is at zero, and your credit card balance is at zero. So that's how you're able to improve your credit score. So there it is. As I said, it's very straightforward, nothing too complicated. I gave you the straightforward answer. It's just pay down your balance, and I explained it to you in terms of how it works. It's based on, right, how when your credit card's company sends that information to the credit bureau, and then also based on, the credit card, the scoring system is calculating your score based on the amount that you're using, right? So if you are using, if you have a credit limit of $1,000, as I mentioned, and you have a balance of $800, then your credit utilization ratio is 80%, and that's what impacting your credit score. So that's why you want to bring it down to at least 30%, as I mentioned here, right? Either bring it down to 30%, under 30%, or just pay it off full, before the billing cycle. But that's a short answer, and that's the an explanation in terms of how your credit works. So that's the basic, right? That's just really the basic, the fundamental. This is your FICO scoring system, your FICO scoring model. This is how FICO calculates your credit score based on the amount that you owe. 30%, 35% is based on payment history. So if you just do that, if you keep your balances low under 30%, and then you pay, you make payments on time consistently, you should see your credit score increase. Right now, once you have 24 months of payment history, then you have a mature credit history. Right, 24 months, 2 years of consistently making payments, and you've kept your balance, that if you kept it low, you kept it underneath 30%, then within a year, within, you should see your credit really become mature. But to improve it in 30 days, that's what you have to do, because that was the purpose of this video, to show you how to improve it in 30 days, because you want to get a loan, or because you want to get the lowest interest rate on your credit card. That's how you do it, is make sure you pay down your balance. If you only have one credit card on file, pay it down, and then find out when the billing cycle is, so that you pay before the billing cycle. So when they send it to the credit report, to the credit bureau, then you see your credit score go down. So hopefully this was, you got something out of this. This was educational. This was, you've learned something about how credit works, and I'm going to continue to give out some more information. Subscribe to the YouTube channel at My Credit Funding. Subscribe to our Facebook, and we're also on Instagram, so you can get more educational content on how to improve your credit, optimize your credit, get business credit, improve your business overall, and so on. So until then, we'll